Hello guys, welcome back to the channel, and today we have another educational video for you guys. And today's topic for this video is something called as Fibonacci extensions. So Fibonacci extensions. So as you already know, there is a concept of Fibonacci retracements in the stock market, and if you don't, you can check the video out in our channel. We've already made a video on that topic. So Fibonacci retracement basically is when a price goes up and comes back down. We can use a Fibonacci retracement tool to see till where this level could be, till where this price could possibly come down to, till here or here or here. So these levels helps us decide the retracement levels. So it's called Fibonacci retracement. Now what is a Fibonacci extension? So a Fibonacci extension basically means an extension to this impulse wave. So what is an impulse wave? So an impulse wave, this wave, the bigger wave which happens with momentum, is known as your impulse wave. IMPUL. I'll type it out. This is called an impulse wave, and this small wave is called a retracement wave. Now Fibonacci retracement tool helps us to find the extent to which this retracement may happen in the market. A Fibonacci extension tool helps us to find, after this has happened, price when it goes back up higher, till where does this second impulse move happen. So this is the impulse wave, this is a retracement wave, and again this is another impulse wave. So this second impulse wave, the levels to which this could possibly go to, we can decide this with the help of our Fibonacci extension tool. So a Fibonacci extension tool, so a Fibonacci retracement tool, if you can see here, it has this 0.618, 0.5 and 0.382 levels. But your Fibonacci retracement tools have percentages greater than 100%. So 100%, 138.21. So what are these percentages? So first, where do you get this tool, right? So in TradingView, you can come to the third one from the top here, and you can see this trend-based Fibonacci extension. This is what we'll be using for the Fibonacci extensions. And how do you draw this? So when the price, for example, in a downtrend, when the price is moving down, and then after a certain point, the downtrend is done, and then price forms a higher high, and then a higher low from here, a higher low from here. So what does this mean? This was the downtrend, and now this from here, from these lower highs, price has formed a higher high, and now it has converted into an uptrend. This is what this higher high signifies. So how do we draw our extension tool? So this wave right here, we will consider this as our impulse wave and this as our retracement wave. So first I'll select this. So the first point would be the base of our impulse wave. Second point would be the top of our impulse wave, and the third point would be this point, the retracement wave, the end of our retracement wave. Now these are the Fibonacci extension levels we have. So now these extension levels, it's up to anybody's preference. It comes down to preference which levels you want to, but these are some of the important levels, the 161.8% and 138.2% and 200%. So what are these percentages? So 100% basically means, so if I take this wave right here, this impulse wave, my first impulse wave is this. I have drawn the same line over it. Right, now if I bring this here, this will be my first 100% wave. So what this means is, this impulse wave, if drawn from the bottom of this retracement wave, this would be our 100% extension. A 200% extension would be this same wave, but added twice. That would be a 200% extension. Similarly, 161.8 would mean 161.8 of our first impulse wave. So this is how the extensions are drawn. So these levels help us to fix our targets. After, if we take a buy trade here, we can use these extensions to figure out good levels in the markets to book profits. So How do we use this? We'll see this in some charts here. So this I have BPCL's chart. So if you observe here, price was in a downtrend here, forming lower lows and lower highs, right? This was the lower low, and then price went here. So if you observe here, this was the previous lower low, but then price has broken that low. This is a lower high, and price has broken that high here. So now it has formed a higher high instead. So what this right here would be our impulse wave, this would be our impulse wave, and the retracement wave would be this, correct? Because this is where the price has come back to. So now if I draw my Fibonacci extension tool on this, so the base of the impulse wave is here and the end of the impulse wave is here, and my next level is here. This is my retracement level. Now if you observe here, at the 200% level, as soon as the price has touched the 200% level till here, you can see the momentum of the stock is very high, and momentum is exactly what you need when you're trading. So as soon as it touches 200, the momentum disappears. So you can see as soon as this impulse wave happens, this is the impulse wave 1, this is the impulse wave 2, you can see that buying pressure is disappearing slowly. Sellers are coming back to the market. So this place would be a very ideal place to book your targets as soon as you hit the 200% level. So so this would be your quick movement and quick targets. So another thing with this, to decide which point to take, you could either take it here also, you can take it here also, you can take it here also. So another way to help us decide which level to take profits is something called as market environment. So if you think Nifty is showing good momentum on that particular day or in that particular week, so you could target higher extensions here. So that would be your market environment. And another method is to find confluence. So what confluence generally means is to find another a method for finding this. So suppose you can either have your support and resistance, or you can have your EMAs or moving averages, or you can have your RSI or some other indicator or tools to help you decide your targets, right? So suppose if I take my support and resistance, you can see that the 200 level coincides with my previous resistance. So that would be another. If I see for 138.2 or 161.8, there are no major resistances or levels here. So that is another way to decide which extension to consider for taking targets at. So more examples, we can look at Adani Ports. So if you look at Adani Ports, so price has been forming lower highs and lower lows right from here, lower high, lower low, lower high, lower low, right? Now the next movement from here, this is our next movement. This, can you see any other wave? No, I can't. So this is our next wave. So this impulse wave has broken our previous lower high. So now we can say Adani is in a uptrend, right? Now this has retraced till here. So this is our first impulse wave, and this is our retracement wave. Now if we apply our tool here, Fibonacci extension tool, this is the beginning of the impulse wave, end of the impulse wave, and end of the retracement wave. Now if I see, what can you see? Now Adani Ports right here was at all-time highs, right? So you don't have any other points of confluence here. You don't have a support and resistance or a moving average in these levels. So you can use this when the stock is at all-time highs, especially. So you can see very clearly. I don't think there is any explanation either. So 200%, you can easily book your targets. Again, telling you how these levels are drawn from here to here. If I draw a line and move this here, now that is my 100%. Here, this is my 100%. And the next example we can take is SBI. So SBIN. Now if I look at SBIN on the daily time frames, let me go back to the daily time frames. So here I have already drawn this so on the higher time frames, how you can basically use this is you make bigger impulse waves and bigger retracement waves. On the lower time frames, your impulses and retracements would obviously be small. But here, if you observe on the daily time frames, I'll remove this. Now from here, the stock came under selling pressure, clear downtrend with lower lows and lower highs, and here it broke its previous low. It seems to be at the same level, but if you see the high point of this stock, it's this candle is 206.2 and this candle is 207.3. So this has formed a higher high. So now this is my impulse wave and this is my retracement level. Now drawing my Fibonacci extensions on this, this is how it would look. Right, now you can see this 200 level acting as a resistance here and support back again, so an important level again. Now you can say, why not here? So you do have Fibonacci extension levels above 200 as well. 200 is not your maximum level. You have 2.272 or you have 2.414 also, and you have other levels as well. You can look for yourself which suits you the best, which you like the most. Now here, but 261.8 level is what came in handy here, would have come in handy here, because that is where stock reversed, right? So again, this the point of market conditions comes. So here, if you see, if you think Bank Nifty in that week or that month is showing great strength, then of course you can hold on till the next levels as well. Now again, Confluence, there's no Confluence coming into play because here is your main area and that can coincides with the 200%. So again, Confluence, another reason to book profits at 200 itself. Now another example, let's go to Nifty charts. So these I have drawn on the lower time frames for intraday purposes, to apply this on intraday as well. So this is not just for positional or swing or investments, so this can be used for intraday as well. How do you use in intraday? So you can see here, price had been forming lower lows and lower highs, and this was the next impulse wave. There was no stop in between, right? So this was the next impulse wave, this was the next retracement. Now I drew my Fibonacci extension from here to here. You can clearly observe how market has respected these Fibonacci levels, right? So resistance here, and resistance here. So this is these extensions I have personally observed that there is 138.2, 161.8 and 200%. The reason for me taking these is only these are basically observing on the Nifty and Bank Nifty charts. So these levels for me have worked out well. For you, some other levels may work out. So try out on your own, see what works for you, and then you can use that. And if I go further back also, so here you can see another downtrend, higher high, lower high, lower low, lower high, lower low, and here there's a higher high. So this was the previous high, high broken, now uptrend again. So if I draw my retracement tool again from here till here till here, you can see that price has respected all these levels again very well. So here 100% is respected. It took support at the 100%, not necessarily resistance, and then it has reversed from our 161.8 level. So this was it for this video. Hope you liked it and hope you can use this in the markets to make some good money. Thank you for watching the video. Like and subscribe if you liked it. Thank you.